Welcome to the show. Today our focus is on listing of Vijaya Diagnostic Centre IPO, which is expected to list in next 2-3 days or early next week. As you are aware, Vijaya Diagnostic Centre IPO got a rather tepid response from the retail and HNI investors. QIB response was relatively better, and this allowed the IPO to sail through. Now, good QIB response offers a glimmer of hope. If we glance at the financial performance, the company has done well over the years. Its revenue has increased at a good pace. Profit before tax has also increased. So has the net profit. Its ROCE pre-cash is quite high at 42% for fiscal 2021. The company has done exceptionally well in Q1 FY22, but this could be due to COVID-related effects. The shares are being offered at a PE of 64 times its earnings for the fiscal 21. If we compare Vijay Diagnostic with peers, it's a smaller company compared to Dr. Lal Path. It operates only in 2 states, but its income is reasonably well as it has a good share in those states. CAGR wise, it has shown good growth in sales, in its operating margins, profit after tax over the years, and it is ahead of its competitor on these parameters. So Vijay Diagnostic is one of the fastest growing diagnostic chain by revenue in FY20. It operates in both pathology and radiology. Operations are mainly in states of Telangana and Andhra. It has a notional presence in Delhi and Kolkata. Higher margins of Vijay Diagnostic are mainly due to the fact that it operates in B2C segment. Most of the patients walk in to its labs for tests. Diagnostic markets in these states, that is Telangana and Andhra, is expected to expand at a reasonable rate of 12 to 13%. Vijay Diagnostic has demonstrated steady cash generation, superior balance sheet, and decent return ratios. Another diagnostic chain, Krishna Diagnostic, recently got listed. It debuted at a little premium but subsequently slid below the IPO price. In case of Krishna, profits for FY21 included a one-time gain from fair value movement of CCPS. It was only entry and not real profits. If this is ignored, it made little profits. Compared with Krishna Diagnostics IPO, Vijay Diagnostic Centre IPO appears better placed in terms of valuations. Also, Krishna Diagnostics is focused mainly on the government sector, whereas Vijay Diagnostic Centre is getting its revenue mostly from the customers. The IPO is valued at 64 times its FY21 earnings. Its Q1 FY22 numbers are much better, but we cannot analyze it due to COVID. So overall, Vijay IPO pricing is not cheap, but it is slightly below existing players. Though they are large, these players are large and they have a national spread. Coming to the listing price is very difficult to predict, except in very clear-cut cases. There also one can only give the direction and not the absolute price. Vijay Diagnostic Center is not a clear-cut case, so one cannot be sure which way it will list, above the IPO price or below the IPO price. Vijay Diagnostic Center came out with good Q1 FY22 numbers. It needs to be seen how well the company can sustain it in future. On the bright side, the overall outlook for the healthcare industry in the country is good. We should also remember that of late new IPOs have seen a tepid listing. I am hopeful, despite poor response, Vijay Diagnostic Centre will be able to keep its head above water. May not be on day one, but in days to come. If the stock lists lower than IPO price, the chances of which are there, I am likely to give it some more time. Thank you.